Welcome. You're viewing the video version of the Pirls Stock Market Commentary, featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart for July 17th, 2016. Market breadth. With this past week's market advance, our Bull Bear Point and Figure ratio rose to 2.23 from 1.64 last week, advancing into strongly bullish territory. The total count of securities in bullish or bearish patterns increased 7% to 3,070. The count of bearish stocks decreased 13%, while the count of stocks in bullish patterns increased 18%. The Pirls PNF Market Breadth Summary Chart shows us a market now 3 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly email version of the Pirls Stock Market Commentary, free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 276 points for the 15th advance in 22 weeks. At a positive 471.03 points, it has risen above the June 2014 and February 2015 highs, continues above the November 2014 high, as well as below 2 other highs above plus 100, and also continues above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 0 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on lower average daily volume. Momentum. Now at a positive 125.9 from positive 150.24 a week ago, the CCI 20 daily at Wednesday's 7/13 close had 6 consecutive days above zero for a change of Woody's trend to up. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 11 weeks ago, while the daily CCI 20 began a Woody's uptrend last week. The CCI 20 weekly rose to 167.1 from 82.61 last week, after forming a zero-line reject long entry signal for Monday 7/11 open. We will follow the results of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 3 of the bottom 5 are negative. Summary: brokers, some tech and precious metals on top, banking and some tech on the bottom. Bullish: brokers continues in the top 5. Computer hardware and semis have entered the top 5. Oil services continues in the bottom 5. Oil has entered the bottom 5. KBW Bank has left the bottom 5. Bearish: disk drives continues in the bottom 5. Gold and silver continues in the top 5. REITs has left the top 5 and entered the bottom 5. Focus this week. We present a Greg Hunter YouTube interview with straight-talking and highly knowledgeable Catherine Austin Fitts. The debt game is over. Some highlights are the following. On the economy crashing this year, investment banker and former Assistant Secretary of Housing Catherine Austin Fitts says, "Could we turn into a bear market? I think given the commitment to equity markets and given the willingness to debase the currency, I think the chances of that are relatively small this year. Next year, depending on what happens in the election, the gloves are going to come off globally about what's been going on in the U.S. Anything could happen. That's the danger if you are an investment advisor or an investor. The swings here is we could be up 30% or we could be down 50%. A black swan could happen, so if you are an investor, you need to be prepared for very, very wide swings, both up and down, in prices in the equity markets. Here's the important thing to remember. We now have $12 trillion sitting in negative interest rates. Where's all that money going to go? It can't sit there getting nothing. It will have to go into real estate. It's going to have to go into equity. It's going to have to go to precious metals because it can't sit there getting no or negative yields forever. The debt game is over. On gold and silver, Fitts says, interest rates coming down makes gold and silver more attractive. I think the number one thing driving precious metals is you've still got growth going on in Asia, and they are buyers. People are afraid and they are looking at what is going on with the leadership, and they are getting scared. They want to hedge their bets. And gold and silver is where you go when you don't trust the system. Thank you for joining us for this week's Santu Pirls Stock Market Commentary, featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant summer weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.